Hey everybody, welcome back to the Medina Retirement Planning Channel, where we help you know it so you don't blow it. My name is Victor Medina, and I am a certified financial planner as well as an estate planning attorney. And today we're going to be talking about the new child tax credit that may be delivering up to $300 per child in your bank account. What is it? And more importantly, why should you consider opting out? Now, before we get into that, if you're interested in videos like this, don't forget to hit the subscribe button and the like button here so you can see more content as we produce more things that are interesting to you in the financial and retirement planning world. But today, we're going to be talking about the child tax credit, which is not to be confused with the childCARE tax credit. And so to make sure that we keep them straight, the first one that we're going to be talking about is part of the $1.9 trillion coronavirus relief package signed into law this past spring. These monthly checks are actually part of an expanded child tax credit, which is only available for 1 year. And here's what's happening. We're increasing the amount that you can claim as a child tax credit over the course of 1 year and allowing you to be able to receive ahead of time, sort of prepay that benefit on a monthly basis. So what's happening in July? In July, we're going to take 1/2 of the child tax credit that the IRS thinks that you are entitled to, and they're going to start paying it to you beginning on July 15th, and they'll do that every month until the end of the year. And then you will have, see, that's half a year, you'll have the other half of that tax credit available to you when you file your taxes. Now, the amount of money depends on the number of children that you have, their ages, and your income. So if you've got children age 6 and under, you're going to receive $300 each per month, again, starting in July 15th and every month after that. For children between ages 6 and 17, the amount is $250 per month per child. And again, this program is nothing new. It's already what you were able to claim as a child tax credit, but it is increasing the amount from, let's say, $3,000 to $3,600 in some cases, and they are sending you the money ahead of time as an advance on the tax credit. So we're trying to give you the money ahead of time. Now, the IRS predicts that it's going to cover about 39 million households. They're going to be eligible, which covers about 88% of the children in this country. Now, why wouldn't you want the money? Well, we have to remember that this is not a stimulus payment. It's not a free gift. It's actually just an advance on the increased child tax credit that you can already claim on your 2021 taxes. You're going to get half this money up front and the other half when you file your tax return next year. So, if you don't need the money right now, you could be better off opting out of the checks and claiming the full credit on your 2021 taxes, which would essentially mean that you might get a bigger check in next year if you were going to be able to claim the whole tax credit off of it, or you'd be able to use that into the next year. And at the same time, if you are going to use that full tax credit because you're going to owe taxes, then it's going to lower how much you owe. And so the idea here is that you may be wanting to do your tax planning if you're not anticipating that you're going to be getting a refund from your tax return generally, then it may not be worthwhile for you to accept this money, because it just means that you'll have less credit to use next year when you file your 2021 taxes, and you might owe more money. Now, if you received a major pay raise, or you can no longer claim a child as a dependent, you might have to pay some of that tax credit back. So that would be another consideration in terms of refusing it. And a couple of quick hints for you. The first is that if you're watching this on July 9th, which is what is being published, it's actually too late to opt out of the July 15th credit, and you actually have to file your paperwork by August 2nd if you want to opt out on the rest of the year's payments. The other thing is that if you don't currently file taxes, you still have the opportunity to take this child tax credit, and that would be done following the IRS's rules. They have a way of setting that up, and if you don't have a automatic account, a direct deposit account on file with the IRS, you'll actually be getting a hard check, which is why you didn't see your money appear on July 15th like everyone else. Real quick, last hint on these things, the child tax credit is not considered income. So the check is not going to affect any government benefits like having supplemental Social Security or Social Security disability income or special needs income or anything like that. And you're not going to have to claim it on your taxes as increased credit. This is actually something that is as increased income. This is actually a tax credit. And before I mentioned that the childCARE tax credit is different than the child tax credit. They are not the same. At the same time, the $1.9 trillion American Rescue Plan was signed in March. It also boosted the benefits for people who pay for childcare so they can get to work. And this increasing benefit, it was included before, but we increased it so that you're up to $8,000 for one eligible child or $16,000 for two or more eligible dependents. So both of those amounts are more than twice that of prior limits. It does phase out at higher income. And unlike the child tax credits, these cannot be taken in advance, and they're only going to be reflected after you set your taxes for the year. So, as a reminder, if you are looking to do in sort of proactive tax planning, one of the most important things that you can do is get a hold of your taxes before things happen. You don't want your taxes to be a surprise in April, and this will be especially the case if you start to accept this $300 or some odd dollars per child if they're under age 6 for the rest of the year, because if you're going to owe money next year, it's just going to be a bigger amount that you're going to be owed. So the cash in your hand actually didn't help you out too much, because you're going to have to give that amount back or greater next year when you file your taxes. Again, if you liked this video, stick around for the other ones that we have. Don't forget to hit the subscribe button and the like button as well, so you can get notified with other great videos get published. We'll catch you next time. Bye-bye. Hey, it's Victor. If you liked that video, don't forget to hit the subscribe button as well as the notification bell so you can get alerted anytime we post new content. In addition, we've got some other great videos for you to check out as you go on your retirement planning journey.